Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Wednesday. Hopefully everybody's having a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. Speaking of subscriber guys, we are right over 600. The goal is 1,000 for the year, so make sure you hit that subscribe button to stay up to date on exactly what I'm buying and how the portfolio is doing. So for today, we are up right around $100. We're sitting pretty at that $47,000 mark. We do have buying power left over of $97 due to the $225 dividend we got from Altria, as well as the $50 that we had sitting in there from our prior investment. So let's jump right in. The first stock for the portfolio is Realty Income, sitting at 130 shares, $9,300 worth of market value. Average cost is $67 per share. Around 20% of the portfolio is in Realty Income. Today we're up over $77 or $76. Total we're near 620 with a dividend coming in on the 14th of January of $32.05, which will put us at $100 of free cash in the portfolio. Then we've got Allstate, one of my favorite insurers, at 5 shares, about $620 worth of market value. Average cost is right around $119 a share, so we're up a little bit in this stock, not much, but we have 1.32% of the portfolio in Allstate. 50 cents we're up today. Total we're up nearly $27, up 4.5%. You do want the stock to go down about $4 to $5. I'm comfortable buying it at like the 120 range, but as you guys know, I generally don't buy if the stock is above my average cost, so I do want it to fall below that 118.57. As I said, I'm comfortable at 120, but I don't want to add to my cost basis, so I will be buying it at around $118 a share. Next, we've got Chubb, ticker symbol CB. We've only got 2 shares of this company at $400 of market value. Average cost is right around $188 a share. 0.84% of the portfolio is in Chubb. Today we're down $286. Total we're up nearly $21, up 5.5%. I want to add more of Chubb. It just so happens that I was more focused on Allstate for now. I want to get Allstate to 5 shares, and then I will slowly start compounding and building shares in Chubb as well. Next, we've got Altria. This is the biggest money payer of this set of months at 250 shares, $12K worth of market value. Average cost is right around $47 a share. 26% of the portfolio is in Altria. Today we're down $23. Total we're up 621, up 5.3%. And as I stated earlier, this stock did pay us over $200 of free cash in this month's period, so I'm excited about that. I do want to add a little bit more, but as I said in prior videos, my goal for this year is to get the insurance companies. I know it won't reflect the same amount of cash flow within this year as Altria, because Altria pays such a huge amount of money, but I do want to get that compounding working more in my insurance portion of the portfolio. Next, we've got Procter Gamble, my favorite consumer staple stock. We've got 2 shares, $316 worth of market value. Average cost is right around 142 shares. 0.67% of the portfolio is in Procter Gamble, down 86 cents today, up $33. Total up almost 12% in Procter Gamble. They are a similar issue as Chubb. So my average cost is 187 in Chubb. Right now, it's even worse with Procter & Gamble at 158. As you guys can see, I'm up about $17 in Procter & Gamble stock, which is great for long, for capital gains, but I want it to go lower so I can add more to my passive income. The more shares I buy, the more dividends I rake in. The lower I buy that cost average, or the lower I cost down average, the better my dividend payment and the higher my yield in the stock. So I do want Procter & Gamble to drop quite a bit. Like I said, about $14 or $18, almost $20 here. But that's fine. I don't mind sitting and waiting. I have other options like the next stock in the portfolio. But I do want more Procter & Gamble. I love Gillette. I love Old Spice. These are products that I use. It's why I wanted to purchase the company in the first place, because I wanted to own something that I used every single day. I own a toothpaste brand in Crest. I own Old Spice and deodorant, and I own Gillette, which is one of the best razor manufacturers over the course of history. And I love these consumer brands and these consumer staples because these are products people use every single day, or at least they should. So I will be looking to add more Procter & Gamble once the price drops a bit. Next, we've got Clorox. We've got 4 shares of this consumer staple company, $726 of market value, $174.33 is our average cost. 1.55% of the portfolio is in Clorox. Today we're up $8. Total we're up nearly 30, up 4.2%. We're up to $181. So as you guys can see, it's similar to Procter Gamble, but Procter Gamble's up about $20, where this one is only up around $6 or $7 total. So I'm much happier with Clorox, given that it's up $2 today. So before this big jump, it was right around 180. So I'm okay with that. I'm okay buying it at around 180 because I've bought it close to that prior. But this is going to be one that I'm probably going to add more cash flow to, simply because Procter & Gamble is very overvalued in my opinion, according to my cost basis, and AbbVie is even worse. So this is probably going to be where I put cash or capital in for this set of months going forward, unless we see a significant drop in the other 2 holdings in this set of months. Next is the stock that I am up the absolute most on in the portfolio, and that is AbbVie. This has been one of the longest buy and hold stocks that I've had. I bought it at a huge dip a few years back. This is one of my favorite, or actually is my favorite healthcare stock. 75 shares, $10,000 of market value. Average cost is $81. 22% of the portfolio is in AbbVie. That's significant growth. I did add about 15 more shares at a little bit higher of a cost basis. So my original cost basis was around $72, I believe, and my average cost now is $81. But I have about 22% of the portfolio in AbbVie. Today we're down $15. Total we're up over 4,100, almost $4,170, up almost 70% on AbbVie. As the same story with Procter & Gamble here. As you guys can see, it's reflected that it's gone way up since I bought it, which is great. I bought it during a time when AbbVie was buying another company, and they own Botox and some other really big drugs and whatnot. So Humira is AbbVie's big player when it comes to profits, but they added another company, and they have drugs coming out of that company's pipeline, which is now AbbVie as well. But so that's going to help the profitability of the company. I saw that as an opportunity to buy AbbVie at a lower price, and it really has worked out. So I'm up the most on this stock, almost 70% up on AbbVie, and that nice dividend of, I believe, $1.30 per share. So happy about that. Next, we've got Aflac. Again, this is by far my favorite insurance company. Love Aflac's Dividend Aristocrat, 123 shares, $7,800 worth of market value. Average cost is right around $50 a share. 16.65% of the portfolio is in Aflac. Today we are up $35. Total we're up $1,600, up almost 27% on Aflac stock. And I love them, but they are a bit overvalued, about $13 above my average cost, which is fine. They just did a nice 6-cent dividend increase, which boosted my passive income for my 3rd set of months, which is great. It is right now my lowest paying set of months with it throughout the year, 3, 6, 9, 12. And the more I add, the more the dividend is just going to keep growing. So this is one of those no-brainer Dividend Aristocrats for me, and I love that it's in the insurance space. So this will be the biggest insurance company when it comes to the amount of capital that I allocate. Aflac will be the biggest portfolio size-wise, biggest in the portfolio size-wise when it comes to insurance companies. But next, we've got Prudential. So I've got 40 shares, $4,600 worth of market value. Average cost is about $104 a share. So we're up about $11 on here when it comes to individual shares. About 10%, about 9.9% of the portfolio in Prudential stock. I haven't added to this in quite some time because, again, it's been pretty overvalued. Up $5.20 today, up about $490, almost 12% on Prudential. So I do like Prudential. I just don't like it as much as Aflac. So like I said, if there's a significant drop, like I said with Clorox right now, it would be the stock I would buy in that second set of months. Same thing goes here for Prudential. So if, say, Aflac stays overvalued, I will put money into Prudential if the stock goes down. Next, we've got Travelers at $162.95. So we've got 3 shares, around $490 of market value. Average cost is around 151 bucks a share. 1% of my portfolio is in Travelers. Today we're down 63 cents. Total we're up nearly $37, up 8%. So guys, as you can see here as well, we are up $12 a share. So we're up 12 bucks on Travelers. We are up around 12 bucks on Prudential, and then we're up $13 on Aflac. So right now I believe Travelers would probably be my best buy, and that's where I would be putting the capital if I were to allocate it for technically next month. Because I always buy, so like let's say that, so this month's all trade payment was delegated to Clorox stock because that was the best purchase at that time. So next month when I get paid by AbbVie, Clorox, and Procter Gamble, depending on what stock is closest to my average cost, right now I believe it would be Travelers. That's where I would put the money. So it just has to make sense at the time, and I will be buying the stock that is the least, or the closest to my average cost, or it makes the most sense to buy at that current time. So just jumping into comparing how we're doing to the overall indexes for the year, we are up 29%. So let's take a look. We go against Berkshire, Triple Q, the Dow Jones Average, and of course the S&P 500. So we're at 29%. So let's take a look and see how Berkshire is doing. Berkshire's up 37%, so we are about 8% behind Berkshire, which is totally fine. Triple Q is up 23%, so we're beating them by about 6%. Dow Jones Industrial Average, which is what Buffett used to compare himself to, we are up nearly double that when it comes to the year. And then, of course, for the S&P 500, which is the overall market index, is up only 24%, and we're up 29%. So we're beating that index by about 5%, which is great. So, guys, as you guys know, my goal for the channel is 1,000 subscribers for the year, so make sure you hit subscribe. And my goal was around $5,500. I was guessing about, I'm trying to do about 10 grand a year, so I want to be at 100 grand, which would be about another $40,000, so I'd be about 80K by the time I'm 30. And I guess there's a classic, or there's a meme or whatever I see going around, or a post going around that I keep seeing on Instagram, that if you hit $100,000 before 35, at a 6 or 7% return, you're guaranteed to be a millionaire by the time you retire. So if I beat that, which I believe I am quite substantially, because I got 29% in a year instead of 7, so I'm doing a lot better than that statistic. I should retire earlier than that. So I'm excited. So I'm excited for the YouTube growth, excited for the dividend growth. And guys, if you enjoy the content, make sure you hit the subscribe button. And I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.